Welcome to TheoTrade. This is Don Kaufman. April 23rd, 2021. Doing the weekend update here on a Friday afternoon. As the marketplace, throughout the course of this week, it just shrugged off all worries. We're going to cover that and much more here on, of course, this weekend's update. Let's start off with the fact that, wow, this marketplace has been incredibly resilient. We're going to do a brief market update and then kind of forge our way, of course, into, well, this next week is going to be a fairly substantial week. Not only do we have the monsters of tech releasing earnings, which I'll explain here momentarily, but of course, the Fed, Jerome Powell, he is so very much back. Let's see if he discusses transitory inflation once again. But let's get down to it here. So as I was saying, markets, they just shrugged off really all worries. You know, last week, I had actually mentioned Goldilocks markets or a wrecking ball of risk. And the reason I put that back up here is, ironically, we saw a little bit of both sides of that trade throughout the course of this week. What you're looking at right now on your screen is the S&P futures. And these are the S&P futures based on it's a 30-day 1 hour. And I'll zoom out to the full 30 days, right? That's the full 30 day on a 1 hour. But really, when it comes down to it, what you're seeing here is about, about 10 days of trade, just about 10 days of trade. And talk about, stuck in a channel, if you will, of that trade. And the irony is we both got the Goldilocks marketplace and we also got a wrecking ball of risk. What we saw on, on Thursday afternoon, I think that scared a lot of people. I think it should scare a lot of people. The S&Ps still have the propensity to be able to move. This is again, it's a 1 hour chart, but we had dropped from 4170 handle all the way down to about 4120, 50-point move inside of an hour. But when it comes down to it, it was even faster than that. Nevertheless, we saw, again, both sides of the marketplace, but the feeling today, and again, I just want to bring up today's trade, was a marketplace that was invincible, unbreakable. And that's the only, I think phrase, word to describe some of the price action that we saw today. What I found interesting today is really every fear from yesterday's announcement. Yesterday's announcement, to me, was like the perfect, catalyst to ignite the entire marketplace into kind of a fit of rage. And I make no two ways about this. I mean, listen, if you're going to be wrong big. It's not like I didn't ante up any positions in yesterday's volatility. And of course, the volatility was in fact caused by the possibility of long-term capital gains and a massive shift in long-term capital gains to, to many high net worth investors, which sent the market into a little bit of a tailspin, obviously causing the sell side activity. But the reason I'm telling you, it just felt invincible. As I said, I kind of expected that to be a catalyst. And you know what? You never know where that catalyst is going to come from, but you always have to look at the marketplace. The marketplace is just like a pool of gasoline, and, obviously announcements like coming out like this, and it's, it's a match again into the marketplace. And this was a big one. And the marketplace again felt invincible until we saw some sell side activity though into the close, which ironically kind of kept us guessing. I mean, this is a fairly decent size reversal. The S&P is reversed by 20 handles into the close to finish the week. And this is again a little bit of a market update where we finished the week lower. And you go, no, we couldn't have finished the week lower. But we did. If you take a look at the SPX and apply the SPX expected moves, here's the interesting irony, and I'm actually going to take this all the way down to the 1 minute in just a moment. This line, this central line here at the 41.85 is where the week began, and where did we end up? 41.80. So after all of that, what do you say about the week? Well, the week ended up massively unchanged. That's what it comes down to. So the marketplace has this feeling of invincibility, but net, the S&Ps finished a little bit lower. Now, when it comes down to it as well, let's actually look around the marketplace. So we're going to look at expected moves on indices in different sectors. To do that, I'm actually going to start over in the QQQ. So you look at the QQQ, we apply auto expected moves. What did the QQQ do throughout the course of the week? Again, ever so slightly lower. For those of you that are not necessarily familiar with expected move, allow me to delineate expected move here for just a moment. What I have boxed in is the option market's depiction of risk. This is where the option market says the upper edge is, the lower edge okay? And you're supposed to fall in that range 68% of the time. Now, it's a standard deviation. Now, the central line, and here that dark line, that is representative of where the week began. Okay, and by the way, that's not on a Monday. What it does is actually uses the previous Friday's close. So for instance, we're already projecting forward for next week and what the expected move is going to be for next week. And that's imperative that we understand that. So what did we do on the week? We finished ever so slightly lower. But hold on a second. Then we actually look at the IWM. So we just look at the SPX. Okay, the SPX finished marginally lower. I call it unchanged. The QQQ actually finished lower. Take a look. This is the IWM. The IWM actually picked up a couple of points. Look at the big move inside of the little guy. And what's most interesting about the IWM, this thing was getting smoked earlier in the week. That's Tuesday and Wednesday trade. We are way outside the expected move, only to turn around and finish the week higher. Okay, absolutely huge moves. Which, before I go into any sectors, brings me to my next point. One of the things that's been missed, and I was talking about this earlier in the week in one of the videos, one of the things that's missed, and here we are looking at the same expected moves, and I'm gonna pin this chart on top of it. So we got a chart on top of a chart. I wanted to look at historical volatility. So there's a lot of times, I'm a bit of an option geek. I don't mind being labeled, like you option geek. Yeah, but I also look at things like actual price movement in the marketplace. Now, I'm not going to sit here and compare like historical volatility, the annualized standard deviation of past stock price movement, and I don't compare that to implied volatility. But what I am looking at is in sheer respect to the fact that the historical volatility, that's actual price action in the marketplace, okay, average over the last 5 days. So normally this defaults to 20 days. I actually knocked it down to 5 days because I want to see what's happening, okay, in the here and now. The implied vol isn't necessarily moving, right? Implied volatility, you could look at the VIX. Historical volatility, which is actual price movement, is really starting to heat up. In fact, over the last 9 months, you're actually above average in terms of price action, which is interesting because implied volatility is not necessarily looking at that right now. So how does that compare to the QQQ? The QQQ is not seeing as much price action, but there's absolutely unequivocally an uptick historical volatility there. Then we come over to the spiders. The spiders too, okay, there is an uptick, okay, in terms of historical volatility. Again, not implied, I want to make that clear, not implied volatility. There's an uptick in actual price action in the marketplace. Take a look over at the bonds. Interestingly enough, the bonds of where I've been selling premium, and I've been barking about selling premium here, the bonds, ironically, their historical volatility diminished. Okay, then you can look over at something like the financials. Take a look at the financials. All right, we're not at the highest point of actual price movement, but we're not that far off, people. Like if you were to turn around and rank this, okay, this marketplace is rocking right now. And it's one of the points, again, it's being missed by a lot of traders. And speaking of sectors, take a look, the financials. After all that, the financials literally closed where they started the week. So again, the markets did finish very slightly lower. And I say the market, I'm actually referencing the SPX. When you start looking at expected moves in the indices and sectors, generally speaking, okay, all I see out of, the different sectors. And I look at the financials, and I looked at, over here at the IWM, and I looked at the QQQ. All I see is large price action, okay? Reversal, 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 reversal. And just trading inside of an extraordinarily tight range, but we're trading inside of a tight range on substantial moves. And that is a point to be taken because we're getting an expansion of historical volatility, and it is not likely that we are actually going to stay in that much of a diminished range, especially in products like the QQQ. In fact, one thing we can almost assure you of is the QQQ. This thing is going to be rocking this next week. And it's going to be rocking because the monsters of tech are coming out with earnings. All right, onward and upward. Next, options futures volumes decline. I was talking about this literally on last week's video. And this week, I'm actually going to give you a very definitive update. What you're looking at here is I'm going to have two different dates, April 20th and April 22nd. One of the things that's been very, very bothersome lately to me, and again, I've been in this business long enough to be watching option volumes. What I'm highlighting on the screen right now, this is April of 2020. The average is about 26 million. In 2021, the average has actually jumped, okay, Oh, it's about 40 million contracts. Okay. Just a few weeks ago, that average in 2021 was closer to 42 million. So it's diminished. Take a look at the average contract size in April 2021. It's all the way down to 34 million contracts. So the reason I'm bringing this to your attention, on April 22nd, which was Thursday of this week, that was some pretty rockin' news we got out, right? The marketplace sold off, 50, 55 S&P handles. We only did 36 million contracts. You got to be kidding me. The volume, it's just gone. It's gone. I mean, and look, index and other options, it's gone. I took a look at April 20th. I went back here on April 20th. This was not necessarily a rockin' day. Okay, we were lucky to do like 34 million contracts. It just, again, it just feels like all of that liquidity, it's gone. And everything right now, in terms of liquidity, is concentrated, again, into a handful of products. And I cannot stress this enough to you, all right? Normally, when markets get incredibly volatile, volume picks up, but we concentrate that volume into a handful of products, okay? Here, we don't have really any volatility. The volume has dried up. I mean, the option volume is really diminished. And you can't exactly put your finger on it, but when you go from 40 million contracts and all of a sudden, boom, you drop by 7 million contracts, like a day, that's not right. I mean, looking at maybe a 5 or 10% differential on a day-to-day basis would be normal, but this is a huge drop off in terms of size. The problem with that is we've also concentrated liquidity, meaning that they're only trading, I say the marketplace is only trading a handful of products. It's the same stuff that you guys look at every single day, but nothing else is trading in the marketplace. Like, whatever's in play is trading. Whatever's not, okay, isn't trading any contract size, a few thousand contracts here or there. And that's one of the things that I wanted to bring to your attention because it's dangerous. You have a concentration of liquidity into a handful of products, okay, in a marketplace that is displaying fairly low implied volatility. And yet at the same time, we're actually throwing off historically large moves. So it's a party, people. Onward and upward from there. Throughout the course of the week in a market update, the SPX was actually riding the lower edge of the expected move. So for this, I'm actually going to bring up a 1 minute chart. I'm actually, you know what? I'll expand the time frame. Let's go more than a day. Let's go back for like 4 days, hit apply, hit OK. What I want you to see is the SPX literally, okay, clipping the lower edge of the expected move on Tuesday, okay, bouncing back, clipping the lower edge of the expected move on Thursday, effectively bouncing back. The expected move actually held in both cases. We'll actually look at the expected move, all right, forthcoming here in just a moment for the next week of trade. And it's one of the most important things because there's a lot coming in this next week, and you can already see almost like a crescendo, an expansion, if you will, in terms of volatility. Okay, onward and upward into this next week of trade. Like, listen, I would love to give you, all kinds of details and price action to this next week of trade. But I think you have to respect the fact that we are just shy, okay, of completely uncharted territory. I know everybody wants a little MACD, a little Fibonacci, maybe a little Bollinger Band. You're not going to get it from me. You're not going to get it from me because there's nothing out here to go on, all right? It's uncharted territory to the upside. But what we do, in fact, have throughout the course of this week are more catalysts, okay? So, as the market just shrugged off all of its worries, so it just, markets shrug off those worries, well, you have a lot to worry about this next week. One of the first things, okay, is with a monster week for earnings, and I call it a monster week for earnings because the monsters of tech are Apple and Microsoft. In fact, if I pull up the monster of tech symbols, everything in here is going through earnings, okay? And that is absolutely going to rock the marketplace, okay? So everything in my monster of tech symbol is going through earnings. Like, look, it's Apple, it's Amazon, it's Facebook, it's Google, it's Microsoft. Throw a little Tesla in there, and it is a party, people. Netflix flopped. How did Netflix, though, fare as a stock after the flop? Well, I'll tell you what, it did exactly what it was supposed to. And I cannot stress this and reiterate this enough, okay? I have absolutely had it with all of the pundits talking about, oh, Netflix did this and Netflix did that. And okay, listen very, very carefully. As we go back in time over here, Netflix was a $550 product that was slated to move about $36, $37 in earnings. okay? It ended the week at 505. I mean, listen, is it spot on? No, but when the earnings came out, the stock literally moved right to the edge of the expected move. So in effect, nothing that's being said about the earnings matters. This is like a 1 standard deviation move, and it's very, very normal, okay? What could be abnormal is, listen, you've got some very, very big tech companies that are about to produce earnings, of which, if you look at auto expected moves, okay, Apple obviously coming out towards the latter portion of the week, Microsoft, okay, coming out again earlier on in the week, throw a little Facebook in there. You got a recipe for just wicked days, not only in the Nasdaq, but inside of the S&Ps. And what you're going to see here in a moment, they did actually bump up the implied volatility for the S&Ps in respect to this. But again, I cannot reiterate this enough. There's no feel for it. Okay? Your best avenue to get a feel for earnings is to look at the anticipation of movement, to look and say that the expected move is $17. Don't dare say, oh man, look at the huge move. Look at the huge move in Facebook. Listen, if Facebook moved $17, that's what it was expected to do. Okay? Now, I do have some anticipation. I think the marketplace could really be rocking off of some of these earnings. But the reason that, a moment ago I said, if you're looking for me to give you a definitive evidence of where we're headed next, you're not going to get it. And the reason I simply said that is this is catalyst after catalyst after catalyst. Okay? We skirted through the Netflix earnings, and the Netflix earnings, it didn't really inhibit the marketplace. As I said, market just shrugged it all off, right? Shrugged off the tax plan, shrugged off the bad Netflix earnings. The marketplace, though, there's just no question. It cannot and will not shrug off if some of these tech companies come out with lower numbers. Now, quite frankly, I can't say that. I think that some of them are going to have a bang-up job and a great quarter, okay? But there is, and some of these products that you're looking at, there is a degree of what I would call COVID fatigue in play right now. And Netflix actually felt the brunt of that. And that little bit of, people are ready to get outside. Forget Facebook. Okay, Amazon, you've already bought everything possible. How many more nose hair trimmers can you possibly buy on there? But anyway, there feels like a degree of fatigue, which in fact could cause a little bit of slack in some of the earnings. So I'm extraordinarily suspect of this. But the one interesting thing, I don't see any of that being priced per se into the expected moves. Like there's not a wildly increased expected move. And again, more on this as the week kind of progresses. All right, onward and upward past earnings. Again, earnings are the big catalyst throughout the course of the week. A little bit of a crypto smackdown throughout the course of the week. When I say a crypto smackdown, so here is, once again, I love to look at things that are what I would construe as ironic in the marketplace. You want irony? It's crypto, specifically Bitcoin. We'll get into Bitcoin and look at the Bitcoin futures here. This is what caused this, the tax plan caused more of a smackdown inside of crypto than it did in the S&P 500. Huh? Go figure. I know, because people are sitting on huge gains. Okay? Yeah, but the way I look at it, if you look at this on a year-to-date basis, it's up some 61% year-to-date basis. All I did is just snap to a year-to-date percentage over there. There's other stocks, though, that have outperformed. And by the way, Tesla, is flat on the year. But you would expect that, if a percentage basis was a problem, Tesla over the last 3 years is up almost 1,200%. Okay? Bitcoin is actually up, all right, only what? About, just shy of about 500%. So if it's capital gains that are the issue, why Bitcoin? All right, there's obviously more than meets the eye going on in here. The other aspect that really should be paid very, very careful attention to, micro Bitcoin futures contracts that kick off May 10th. And what is going to happen with those Bitcoin, the micro Bitcoin futures, okay? They're 1/10 the size of the coin. So if the coin is $50,000, you're going to be able to trade something 1/10 the size of that, right? So it's $5,000 of notional value. I do believe that is going to absolutely change the game inside of Bitcoin, because that arbitrage, it is going to be hot and heavy, people. This is going to change Bitcoin. Forget about it's going to change crypto as soon as they release these micros, because now it's not about you and me. Now the arbitrageurs are coming in. Now it's going to be big boy, and there's going to be more relationship of Bitcoin, I would believe, to the rest of the marketplace. But again, the interesting irony over here is that the announcement, all right, on the possible tax plan and long-term capital gains had more of an impact, all right, to an area that's supposed to be trading almost autonomous, and outside the rules of regular finance. It was impacted more than really any of the products. Okay, a couple last things. FOMC meeting this week. The FOMC meeting is actually driving the expected move to some degree inside of the SPX. SPX expected move is just over 51 bucks. Last week's move was 54.43. By the way, we hit every ounce of last week's move. We literally skirted the lower edge of the expected move throughout the course of this past week, right? And then popped back up. This next week, we're actually looking at a $61 move. Now, okay, is it really the FOMC that's causing the larger expected move, or is it the fact that the monsters of tech are releasing? Okay, it doesn't make a difference, but there is a little bit more implied volatility in here. Speaking of the FOMC, the only word that they're going to be using is transitory. Don't you worry about a thing. Have no fear. The transitory risks are here. And that would pretty much be the plight of the Fed. I wouldn't expect a tremendous amount out of the Fed, okay, but there will be discussion of inflationary pressures. And with the discussion of inflationary pressures, with the discussion of the job market, with the discussion of supply line disruptions, you always, okay, can promote a degree of risk to the marketplace. The question is, this next week, is the marketplace really going to be capable of shrugging off some more worries? Because we are undoubtedly, all right, throughout all the earnings that are coming out, through what I call a little bit of COVID fatigue, okay, we are going to see some more risk come into this marketplace. These expansive moves, okay, they're the preeminent place that I'm watching right now. All we need is volatility, and that is implied volatility to start picking up in this marketplace. Once again, is going to be a rockin'. Make sure you keep your risk in check this next week. Again, with a $61 move, FOMC, all of these earnings announcements, okay, hopefully we actually get through the next week, flat to unchanged. I'll tell you what, I'll take what the defense gives me, because at this point, I am positive theta. Capital is actually rolling in quite nicely. Sure, like any other trader, I'd love some volatility to the marketplace. But at this point, I'll also take a moot market point, and that is, hey, flat channeling over here will get the job done if you're positive theta. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful weekend. Bye-bye.